And in our top business story, Dubai International has maintained its strong growth trend in April 2014, with more than 6.1 million passengers passing through the airport. This is the third time in 4 months the airport has recorded monthly traffic of more than 6 million passengers. Passenger numbers rose 13.7% to 6,159,634 in April 2014, up from 5,418,946 passengers recorded in April 2013. During the first 4 months of 2014, traffic climbed 11.9% to 24,521,454 passengers, up from 21,905,363 in the same period last year. Regionally, Western Europe achieved the highest growth in passenger numbers in April, followed by the Indian subcontinent, where growth was driven in particular by double-digit increases in passenger traffic from Pakistani cities Karachi and Islamabad. Total aircraft movements reached 31,234 in April 2014, climbing 2.5% from the 30,469 movements recorded in April last year. Additionally, cargo volumes also continued to climb, rising 3.7% in April to 207,317 tonnes, up from 199,985 tonnes recorded in the same month last year. The GCC is well ahead of other Arab countries in terms of e-performance and creation of a knowledge economy. The UAE was the top country in the Arab world based on the Knowledge Economy Index 2012 and was ranked 42nd globally. That's according to the Arab Knowledge Economy Report 2014. The new findings, compiled by Madar Research and Development together with Orient Planet PR and Marketing Solutions, were released based on the effective use of knowledge for technological innovation, social and economic development. The UAE topped the index with a score of 6.94, followed by Bahrain and Oman. The index assessed the economy based on 4 key indicators, which included economic incentive regime, ICT structure, education and innovation. As part of the new report, the research groups compiled the 2013-14 Arab E-Performance Index, which incorporated the findings of the six most important global indexes, including the Knowledge Economy Indicator, together with Global Competitiveness and Network Readiness Index, among others. Bahrain topped the index with a score of 65.55, followed by UAE and Qatar. The report further added that internet penetration rate in the Arab region is expected to reach 51% in 2017, compared to 32% in 2012. Therefore, the CEO of Madar Research recommended that governments should make greater investments in education, innovation and research and development.
Most important, actually, is to allocate budget for R&D and make it much higher than the current budget in all major universities in UAE, Qatar, and etc. Because if we spend much more on the research and development, this will help first to register or to register more, to receive more patents. Actually, we should enhance the as well the staff teaching, because the main criteria for ranking universities based on number of research papers is how many of the staff getting, for example, Nobel Prize or Fidel medals and etc. So we have to take care of the professors and the other staff and allocate much more money for R&D. This is for education.
Dubai-based developer Emaar Properties has received approval from the authorities to list shares in its retail and malls division on the Dubai financial market. Emaar announced that it had received long-awaited approval from the Securities and Commodities Authority to float 25% of its shopping mall subsidiary, Emaar Malls Group, estimated to be worth about 9 billion dirhams. In a statement to the Dubai Bourse, Emaar said that it would distribute the money raised from the listing as a dividend to shareholders, adding that existing shareholders would be offered a priority right to subscribe to shares. Emaar first announced that it was considering floating part of its lucrative malls divisions in March, following months of speculation. Stretching to more than 5.8 million square feet in Dubai, Emaar's malls assets include Dubai's largest shopping centre, the Dubai Mall, as well as Dubai Marina Mall, Souk Al Bahar and Gold and Diamond Park. Demand for sustainable energy solutions, particularly solar energy in the MENA region, is expected to witness significant growth and will emerge as a hub in the coming years. That's according to officials from Yingli Solar. Speaking at the press conference, officials from the Chinese firm Yingli Solar, one of the world's largest manufacturers and installers of solar panels, announced their company's intentions of entering the regional market. Highlighting the significance of the region, the officials cited latest industry reports and added that as a result of ambitious targets set by GCC countries to cut carbon emissions, over $50 billion are expected to be invested in renewable energy production by the year 2020, out of which 7,500 megawatts is expected to be from solar power. As both Abu Dhabi and Dubai are targeting to generate 7% and 5% of their electricity respectively from renewable sources by the year 2020, while Saudi Arabia plans to build capacity of 54 gigawatts of renewable energy by 2032, Yingli Solar officials described the market as fertile. The company, which holds 9% of global market share in solar panel sales, aims to increase its presence in the region and capitalize on the expected surge in demand.
Sun will give us the energy, will give us the electricity for our households, for our utilities, for everybody. And solar is a cheap energy. Actually, it costs you nothing except the installation of the panels. So why not to use this instead of burning fossil fuel, which we either don't have enough, or we don't have at all, or we can sell it to other ones who need it much more than solar. The UAE market, Abu Dhabi and Dubai is, imagine what was real estate in the year 1999. So there were plans, and these plans need to be done and to be realized. Developing of shopping malls, developing of infrastructure, developing of everything. Imagine same thing as now with solar and with renewable energies. So it will start slowly. There are enough plans, there are enough good strategies. Now it's exactly the critical point where we need to implement all that strategies. And this will happen in the next few years. The plans are there, if it's Abu Dhabi, if it's Dubai, if it's Saudi, Jordan started already, Egypt has also big plans, so the plans are there. And we are very confident that the governments and the regulators and the people itself, the population, will go into the green part.